Hi everyone. So like, subscribe and share this video. Now, I'm going to do something a bit different today, and I'm going to compare the S&P 500 to the Japanese Nikkei. And this is coming from a website called dqydj.com. Now, on this video, I'm going to show some very surprising statistics. So I'm going to start with the US S&P 500. I'm going to start with 1950 until today. The reason is simple, because the Nikkei one only starts from 1950. So we're going to do a like for like comparison. Both are going to be from 1950 until today, and then we're going to look at different time periods. First of all, we're not going to adjust for inflation to begin with, but we will do. And on the Nikkei, we're going to show US dollar returns, so it's like for like. So let's start with the S&P 500. Obviously, the total return is going to be high, right? Because it's 70 years. So 22,000% or whatever. But the annual S&P 500 return has been 7.9% since 1950. Adjusted for inflation, it's been 11 or adjusted for dividend reinvestment, should I say, it's 11.41%, which is higher than the 10% most people assume. But it is only from one time period. We're going to look at different time periods. What's fascinating is when we look here, the Nikkei has actually beaten the S&P 500 since 1950. So the annual return has been 10.18% versus 7.9%. Adjusted for dividend reinvestment, it's 13.31% per year in US dollar terms versus 11.42%. Now let's adjust for inflation. You can see then the average return of the Nikkei has been 6.5% and adjusted for dividend reinvestment, 9.5% per year. And when it comes to the US, we can see it's 4.3%, but if somebody would have reinvested dividend, it's 7.7%. So both have performed very well since 1950, but the S&P 500 has actually done worse. But now let's do something else. Let's compare from 1960. And from now on in, let's adjust for inflation each time. So in 1960 until now, the S&P 500 has done 3.3% per year, but 6.36% per year after inflation if you reinvested dividends. Again, remember, this is after inflation, so it's obviously higher than 3.3%. Now with the Nikkei, you can see the total US dollar return has been 4% since 1960 and 6.16% adjusted for dividend reinvestment. Again, it's similar, but if you would have reinvested your dividends, the S&P 500 is a bit better because it's 3.3%. but 6.3% if you reinvested your dividends, adjusted for inflation. Whereas here, it's 4% for the Nikkei, but 6.1% if you reinvested your dividends. So you could say the Nikkei's capital appreciation since 1960 has been better than the S&P 500, but adjusted for dividend, it's a little bit less. Now let's go to 1970. And you can see that the average return of the Nikkei, if somebody would have started in 1970, has been 3.5% adjusted for inflation in US dollar terms again, and 5.1% if you would have reinvested your dividends. Whereas for the S&P 500, it's 3.59% or 3.6%, but if you would have reinvested your dividends, 6.6% per year. Much higher now. 1.5% higher per year, but it's still a respectable return for the Nikkei, right? Now let's go to 1980 until now. What do we get? So the S&P 500 has done very well. 8.58% per year on average if you reinvested your dividends. Obviously less if you didn't reinvest your dividends. For the Nikkei now, it's down, but it's still respectable, right? It's 2.5% or it's 3.87% per year on average if you would have reinvested your dividends. Now, Japan went into a bubble economy during the 80s and it had a big stock market crash. So let's actually now do 5-year increments. 85, 85. So you can see though, from 85 until now, again, the returns are very respectable, 3.6% per year if you would have reinvested your dividends in the Nikkei in US dollar terms. And the US is pretty much the same, 8.6%. Now let's go to 1990, which is much more significant because that was when the market hit the peak in Japan. Now you can see that the annual return has been minus 2.1% per year, adjusted for inflation in US dollar terms. However, if you would have reinvested your dividends, it's 0.9 or minus 0.9% per year if you would have held from 1990 until today. Whereas if we go to the US, we can see, again, it's very positive. But let's go now to 1995 and do the same for the US. So the US is pretty much unchanged. It's gone up a bit to 8.1% and 6.1%. Again, 8.1% adjusted for dividend reinvestment. Whereas in comparison, Japan, it's minus 0.81% in terms of the real inflation adjusted returns per year of the Nikkei. However, you would have actually made 0.58% per year if you would have reinvested your dividends adjusted for inflation. And what's very significant about this is this: if you look here, the total return of the Nikkei has been minus 19% since 1995. Because a lot of people say, well, you know what, the Japanese market is the only major stock market that hasn't recovered. And that's true. And that is the reason why the average annual returns are minus. Not much, but it's minus 0.8%. However, somebody still would have made money, even adjusted for inflation, if they would have reinvested their dividends. And they would have made a lot of money in the US. Now let's go to 2000 for both. This is just after the NASDAQ crash. So for the S&P 500, it's lower, but it's 4.5% per year on average, assuming dividends were reinvested. Again, Japan's very interesting, slightly minus per year if you didn't reinvest your dividends, but 1.2% a year adjusted for inflation, assuming you reinvested your dividends. Now, this goes completely against the narrative that you would have lost money in the Japanese stock market, even if somebody would have been 100% in Japan, but all they did was reinvest their dividends, they would have actually beaten inflation. So let's now go to 2005. What do we see? We see Japan's done pretty well. In fact, it's done better. Oh, no, it hasn't actually. Sorry, I didn't update it. Well, the US has done much better, but Japan's done pretty well, 5.5% per year on average, if you reinvested your dividends above inflation. But then let's say somebody would have invested just before the economic crisis of 2007. You can see the US has done very well. Somebody who invested just before the economic crisis would have got 7.47% per year on average after inflation if they would have reinvested their dividends. In comparison, in Japan, we can see though it's still very good. Now let's do since 2010, the final one. You can see the US has done very well. But Japan has also done pretty well. So what's interesting about this video is, number one, it shows the Japanese Nikkei has actually beaten the S&P 500 since 1950. Number two, don't just focus on capital values. Even in an extreme market like Japan, somebody could have easily made money if they just reinvested dividends. And number three, if somebody would have held both markets in conjunction, they would have consistently made money. I hope that's useful, everyone, and see you next time.